My name is Dan Dorval, and I'm President and CEO of Dorval and Cherney Financial Advisors. I am an independent certified financial planner and author of my book, Financial Success for the Rest of Us, Reality Based Financial Planning for Mainstream America.
Hi, my name is Leah Woodley. I'm an associate financial advisor with Dorval and Cherney Financial Advisors. Our conversations discuss what it means to do quality of life planning in all areas of your life.
Dan, you recently had a very interesting meeting with a 78-year-old who ended up owing $93,000 in taxes. Tell me a little bit about what happened with that.
Well, she came in and we had talked in the past about her financial planning, and she had a relatively simple situation as far as we were aware. And when she came in, you could tell she was pretty flustered. And she's like, I think I did a bad thing. And I'm like, well, what happened? And she goes, well, I met with my tax person and I owe $93,000 in taxes. And I was like, okay, hold on a second. 93,000, what did you do?
Mhm.
And it turns out, and she had never disclosed this to us previously, but she had bought some individual stocks kind of a long time ago on her own in accounts outside of our group. And one of those stocks was NVIDIA. And for those of you that know, NVIDIA has done incredibly well over the years. So she accumulated a very large position in NVIDIA. Well, last year, when election stuff was coming out and people were starting to get nervous, she started to get cold feet and she ended up selling a very large portion of NVIDIA. Now, she had no idea how taxes work, but she thought the next day she kind of thought about it and her cold feet went away and she bought back her NVIDIA. Of course, at a slightly higher price, but she bought back her NVIDIA. And she was thinking because she had sold and then bought, she was thinking, well, I'm not going to owe any tax. But that's not how taxes work. Once she sold, that triggered capital gains taxes. And there's something called a wash sale rule where if you sell and then you buy the same thing back, it's not like that helps you from this, perspective of avoiding the capital gains. So she was completely shocked when her tax person told her she owed all this money. And the interesting thing is she is from that generation. She's 78 years old. Excuse me. She is from that generation where a lot of times they're a little more secretive about some of their finances, which it makes financial planning a little more challenging. If she had just reached out to us and asked or said, here's what I'm planning to do, are there any negatives to this? It would have been very easy for me to explain what the potential issues were, but she never did that.
Wow. So it's kind of like when you go to the doctor, you kind of have to just disclose everything so they can give you sound advice and really help you with everything that you're facing. And she didn't disclose everything. Do you have a process of uncovering those little hidden or secret assets that clients may have?
Well, sometimes they'll give us a little flag. Like they'll let kind of the cat out of the bag a little bit and we'll be like, okay, hold on a second. You just mentioned some other holding or you mentioned something else. What we don't see that account. What are you talking about? And you might have to dig in a little bit. And then people are still, in many cases, they just when you come from that generation, they've been conditioned not to share everything. And I don't know exactly why, but it is the way that a lot of those people are. So if she had mentioned, hey, I own some individual stocks or whatever, she had done that at one point, but I had no idea it was the size of what she was talking about. And, we never had an inclination that she had the potential for this big of a capital gain. But the interesting part is she had plenty of money based on our advice. We had told her to have a significant amount of cash reserves for some things she had coming up. And we wanted those cash reserves just to be liquid in a high yield savings account. And I thought when she mentioned this 93,000, I'm like, okay, it's going to eat a lot of her cash, but she has enough cash to pay the taxes. Well, the problem was, and this happens all the time, she took that cash and put it in a CD. So she took what's supposed to be her liquid emergency reserves, and in order to get maybe an extra 0.5% of interest, she locked it up in a 1 year CD, and it was not going to be coming due anytime near when she was going to need this money. So it took away so much of her flexibility. So people kind of overthink these things and
Yeah,
go, hey, I can get a little bit of extra interest. But you always want to think about, well, what is this money for? And if it's an
yeah,
emergency reserve, it's for things that might be unexpected, which means locking it up in an annuity or a CD or something that has, any sort of penalties associated with it. Even if that gives you a slightly higher rate of return, it probably isn't worth it in the whole scheme of using it for things that might be completely unexpected.
right. And the unfortunate thing is she had two financial professionals she was working with between you and her tax person. And had she disclosed her intentions, she wouldn't have ended up in this situation. How do you kind of balance providing your tax perspective when clients do have a separate CPA who they're working with?
That's a great question. That's almost a topic for its own separate video because, this is tax season. We're winding up tax season. And we get so many clients reaching out to us, and in many cases they have a surprise, like what just happened with this person. In other cases, what happens is we will have talked about like a rhyme and a reason for why we were giving certain advice, and yet the tax person, just almost generically speaking, will look at their taxes and go, hey, do you know you could make a tax deductible IRA contribution? And they go, oh, well, no, we haven't talked about that. And they say, well, you could save, and they say save, this much in taxes. And of course, people don't like to pay extra in taxes. So they go, oh, well, that sounds great. So they make an $8,000 or a $7,000 IRA contribution, depending on how old they are. And they do it on a tax deductible basis based on their accountant. Well, then we remind them that we had suggested maybe they do a Roth contribution. Well, you can't do a deductible IRA and a Roth contribution, in the same $8,000. And they forgot why we had suggested that they do a Roth instead of deductible. Yes, they
Mm,
can do the deductible, but there might be a reason from a planning perspective. It might give them greater flexibility. It might give them, future, like less RMDs in the future. There's all sorts of reasons why you might do, one versus the other. But for tax people, they so often view the issue from that 100% tax, puzzle piece, that they just say, well, if we can defer taxes today, that's always a good thing. Because then they tell
mm,
the client, well, your tax bill would have been this much, but now you did this, so now it's this much. And they act like you saved that money. All you did was defer the taxes. So those
right.
taxes are going to be due in the future. And for some people, that's a benefit. But for many other people, it's not any sort of a true tax savings.
Exactly. They're just looking at this one brief moment in time, and we're looking at the big picture. So, yeah, that can be frustrating. So, this had to have been a very embarrassing situation for this woman. How do you walk the line between helping them not feel embarrassed when they've made such a costly mistake like this?
Well, and specifically for her, this was a legitimate mistake. She was never going to use this money. She was probably going to hold this stock until she eventually passed away and then leave it to her kids. And if she had done that, she would get what's called step up in cost basis upon death. And her kids could have inherited all of that NVIDIA stock with no tax at all. So
Mm,
the biggest recipient in this was Uncle Sam getting more taxes that they potentially may have never received. So she was embarrassed. Now, it's not like, I mean, it was water under the bridge already. It's not like we could go back in time and change it. So obsessing over actions that we could have taken in the past, that's not really productive. I mean, most of the time, if somebody's done something embarrassing, we want to move forward and say,
Mhm.
okay, here's the next step. Here's how you deal with paying your taxes. What we ended up doing was selling some other holdings that had some losses. They were going to be offset against some potential things that she had coming up. And so we weren't going to hurt her tax situation going forward. You just focus on the next steps rather than trying to, really pound home that, hey, you could have done this differently. That ship had sailed.
Yeah, absolutely. I think what you mentioned about the step up in basis, I think that's something that a lot of people are unaware of. And that's the importance of having a financial professional to help you because those are blind spots for most people. Those are things you wouldn't even know that you don't know. So I think having someone to provide you with advice on those blind spot areas is critically important.
Well, and I think another really important aspect of this is this issue with trading individual stocks.
Mm,
You can do extremely well if you had bought, Apple a long time ago or Amazon a long time ago, Tesla a long time ago. But these stocks are so incredibly volatile at times. Even
mhm,
the best stocks have lost 50, 60, 70% of their value at some point in history. Right now, Tesla's down more than 50% of their value from their peak just in a few months. Now, I don't know what that means going forward, but what it does to people is emotionally, it's very difficult for us to ride through that level of volatility. So when she got cold feet, I mean,
mm,
it was because Nvidia was going down for a relatively brief period of time. She got a little bit scared, thinking, "Well, is this going to continue? Is this not going to continue?" And so she took an action that probably was not in her best interest, and she did it like quick, like it was a reaction type of thing before she could think through the ramifications or talk to us or her tax person about any of those ramifications. That is really one of the biggest issues with trading individual stocks. I don't mind somebody buying these types of stocks, but behaviorally, just human behavior, we don't translate very well into a tremendous amount of volatility because it triggers this fight or flight, response that we evolved over time to survive in dangerous situations. And stock trading, in many cases, triggers that for people. So for her, it was a really unfortunate incident, but it also wasn't entirely surprising.
That is such a great point. I didn't consider that aspect of the volatility of the individual stock and how it does impact you just from a risk perspective. I think that there are some people that, try to hop on those trends and hop on those stocks that do have potential. And like you said, there's nothing wrong with that. But if you know that you can't bear the volatility, it may not be appropriate for you. You can get those same stocks within a mutual fund. So that is such a great point. Well, is there anything you want to add to leave with our viewers as key takeaways from a case like this?
I think the biggest takeaway, we've covered quite a few things in this conversation, but I think the biggest takeaway is if you are working with any sort of professionals, so if you have a financial advisor, if you have a tax professional, I think it's really important for you to be transparent in disclosing to them the different things you're dealing with so that they can see that big picture. So many people look at these puzzle pieces of their finances as like a singular puzzle piece rather than a bigger component of, a component of a bigger picture. And so they'll focus on one puzzle piece and only tell their person about that thing, and then they forget to disclose some of the other things. Well, then you can't give decent advice in that bigger context. And so I do think younger generations are a little bit better at that. But if somebody's thinking, well, I'm not going to tell my professional person, my person who I trust to advise me, if I'm not going to tell them everything, that probably means it's not a great relationship.
Yes, that is so true. And that is such a great point. Well, thank you for all that you shared on this morning. Thank you for dropping those gems and giving advice to our viewers. Until next time, take care.
Thanks, Leah.
Thank you.